Hello everyone, welcome back on my YouTube channel. The topics of this today's video will be the liquidity. So we're gonna see what is the liquidity, how it tends to work, and also we are gonna check and spot it on the chart in order to train your eyes. The liquidity is a very important concept and is even more important with the time. Price tend to react even more to the liquidity areas, which is very important in order to catch a very good move. Simply, the liquidity will be the accumulation of orders that we got on the markets. Essentially, we are all liquidity in the markets. That doesn't necessarily mean all orders must be taken out directly. So, when price is accumulating, price will create highs and lows. Above the highs we will have sell orders, and below the low we will have buy orders. When price stops to accumulate and break into an area, that will induce people to follow the price. And what price usually do is price totally reverse. When price reverse, price will take out even more liquidity, because all the people that get induced to buy into this leg or this one will be taken out by a big move, and this will occur or an even bigger move on the market. For sure, market can't go without at some point make some pullback and retracement. So when price doesn't have enough liquidity, it comes back to rebalance the price, take out orders, and then continue its move. So when price is going down or going up, it creates lower highs, lower low, or higher highs and higher low. Above those points we have liquidity, and at some point when price lose power and need liquidity, it will comes back into those area to take out the liquidity in order to rebalance the price and being able to continue its move to the downside. As I said earlier, not all the orders must be taken out directly. So for example, we have liquidity above this high, but this liquidity doesn't need necessarily now to get taken out by the price, because the bearish momentum is important and price doesn't necessarily need to sweep those kind of highs. When it comes to SMC or supply and demand, we are also subject at the liquidity traps, and this is why it's really important to add the confluences into your setup in order to avoid those kind of traps that you can have on the market. So basically, when you are trending bullish, you are looking for demand at the higher low of the other leg to continue the move of the price. At certain area, price will not follow its supply and demand, because price needs to take out some liquidity. And when price needs to take out some liquidity, it will comes back to a demand that is below your demand of the actual structure, and will take out liquidity, sell side liquidity, and will also rebalance the price. So this is why it's important to find some area where you have clear imbalance and clear liquidity above those one. Another common example that I see every time on the market is when price is trending but is not able to create liquidity. So for example, here we are trending bullish, price is making high and high low. Price at some point accumulate orders and then break the market to the upside. As we can see, price doesn't create liquidity into the leg that break the market structure. So when price will come back into the initial demand here, what most people will do is that they will buy, because they will follow the demand in order to create new high in the market. Most of the time, those demand areas will be traps, and price will accumulate on those zones before breaking them. When price will accumulate, that will create sell orders and buy orders. We will have buy side liquidity and sell side liquidity. Once price will sweep that sell side liquidity and the one of the low, we will be able to find a demand below that which have more confluence as liquidity, imbalance, etc. And when price taps into that demand, it will have a lot of liquidity to sweep, because we will have a lot of buy side liquidity here and a lot of buy side liquidity here. When price will comes back into those orders, it will sweep them, and this will induce even a better bullish move, because when the sell orders will go to the stop loss, people will have to buy those orders. The last example is simply when people are trading the internal structure. So again, we are bullish, so market is screening high. Price comes back and start to create internal structure. At some point, price creates an impulsion that breaks the internal structure, but doesn't break the swing structure. What most people will do here, and that's a big mistake, is that people will take a demand from that areas and will try to buy from that areas. For a supply or demand to be created, we need a swing high to be broken. In this case, the swing high here is not broken, so that low isn't a higher low. This low is still the higher low of the leg. So this low will simply become weak and will simply become the sell side liquidity that we will use for our demand to fuel the price. As I said earlier, the liquidity is a very important concept, and that's why now we are gonna see on the market some few examples, and we are gonna see how the market tends to move with the liquidity. For the first example here, so we can see that price make a break in the market structure to the upside and then makes a change of character. After that, price creates a high, then break the market to the downside. As we can see, this break to the downside occur a supply. When price comes back here, as we don't have real liquidity here, price use that supply as liquidity. Here, this will be the buy side liquidity, and this buy side liquidity will fuel the move for the supply that we have above. And as we can see on the supply that we have above, we have even more confluences as this one. We have a bigger momentum, we have more imbalance, we have more liquidity, also a better one. So this is clearly a best zone to trade. The traders that want directly to be implicated into a position will look into that kind of zone, because this is the most clear zone, the clearer zone that they see, and when price will comes back faster into it, so they prefer to take this one, because taking this one they will wait too long, and at the end they will just be taken out because price will use them as liquidity. So this is really important to note, that you need clear liquidity in order to fuel your supply and demand. Otherwise, your supply and demand will totally fail every time. Second example here. So as we can see, market is clearly bearish, so it's putting lower low and lower high. So price here is putting a lower high. We can see that price goes to the swing low, react to it, create a high, and then break the market structure. So at this point, what many people will do is they will take their supply from here, and as we can see here, you have a bit liquidity, but you don't have any imbalance for that one, and you don't have big liquidity. You only have a high created on the M15 candle with a move to the downside. So at this point here, this supply will surely become liquidity, and this will create liquidity. So here that will create the sell side liquidity that price will be able to use after the delivery of the supply. And to get the delivery of the supply, price will need to swap the buy side liquidity that we have here, where most people will get trapped. And once every people are trapped, price is able to create his down move. This is what I love with the liquidity, is once you can spot it, once you train your eyes to see it, you can't erase it from your head, you can't erase it from your eyes. It's really important to be taken out in order to understand how liquidity works. You cannot understand it directly just without practicing and without getting out sometimes, okay? And even you understand liquidity, you will also be taken out sometimes. Markets will always beat us, but the important is to beat him on the long term with consistency. So on the liquidity, it is really important to always have clear liquidity that is driving your supply or demand area. Third example, in this example, price is trending down, so we are making lower low and lower high, and as we can see here, price creates a strong lower low here, and then price accumulate order before dropping to the downside. This example is to show you that price will not every time sweep the liquidity, and price will not every time taps into your supply or demand. And this is really important because you don't have to try to find a way to enter here. It's better to don't enter in those kind of areas that works maybe 10 or 20% of the times than losing money into it. I prefer to miss a trade here than losing money 80% of the time on setups like that by trying to take them. So it's really important to have setups that you are trading and setups that you know. And if market doesn't show those setups, that's okay. You just don't trade that market, and that means that you don't have to be in any trade in this market. Last example here. So as we can see, we are trending bullish on this market, so price is reacting from the demand areas. As we can see here, price laugh as before, do the exact same thing. So price rejects the break of structure, create a low, and then break that structure. By that, price creating a lot of sell side liquidity. We have a lot of people that are in buys here and who their orders are sitting below this area. When price comes back to that zone, we can see that it reacts to it, accumulating orders, creating buy side liquidity after sweeping the sell side liquidity and reacting to the extreme of the structure. Once price reacts to the extreme, it runs all the buy side liquidity and break the market structure again to the upside. Once you will understand the schematic of liquidity, all will take place for you, because you can mark nice supply and demand area, but supply and demand at itself doesn't make anything. You will take many losses, and this is why it's important to have many compliance with them in order to trade them well and choose the right ones. Okay guys, this is the end of this first video on the liquidity concept. So let me know how you found it into the comment section, like the video and subscribe. At 1k subscriber, I'm gonna make a giveaway. I will let you know later on Telegram what is it, so don't hesitate to follow me on this social media. You can also follow me on Instagram, and for the one that want to take to the next level, you can enroll to my mentorship program. You can take a subscription, and you will take from that a Discord community with a complete course, 2 Telegram channels, which are backtesting session, and my 2.0 courses. And for the 3-month and yearly option, you will also get my SMC Bible for free. So see you on the other side, guys, and see you on the next video. Bye bye.